Hey everyone, welcome to this explainer. Today we are tackling something literally every investor faces, but honestly, very few actually master. It's called the crash capitalist strategy. Look, we're going to completely rewire how you think about market drops. You know that horrible knot of anxiety you get in your stomach when the red arrows start flashing? Yeah, we're going to transform that into a massive strategic advantage. So let's flip the script on market panic, shall we?
All right, picture this. You wake up, grab your phone, and check the financial news. The headlines? They are just blaring. The tickers are all painted this deep, angry red. And right there, smack in the middle of your screen, is this number. 10%. A sudden stark 10% drop in the market. I mean, it happens so fast, right? And it feels incredibly real. The wealth you thought you had just yesterday suddenly seems to be evaporating right before your eyes. The news cycle is speeding up, talking heads are literally shouting about a crisis, and that pressure, man, it just starts mounting by the second.
So I really want you to think about this. I'm asking you directly. When the market drops 10% like that, what do you do? Honestly, what is your immediate physiological gut reaction? Does your heart rate just absolutely spike? Do you feel this overwhelming urge to log into your brokerage account and just hit sell to stop the bleeding? Listen, it's totally okay to admit it if you do. That agitation, that sheer instinct to panic and protect what you have left, it's deeply ingrained in human nature. It's basically the fight or flight response, but applied to your life savings. Okay, let's dive into this, because how you answer that question actually places you squarely into one of two camps. First, meet Ravi. Ravi is the panic seller. The absolute second that 10% drop hits, Ravi is glued to the news, the negativity gets right to him, and he sells everything in an absolute panic, operating under this illusion that he's saving his capital. But then, on the flip side, we have Rohan. Rohan is the crash capitalist. In the exact same market, facing those exact same terrifying headlines, Rohan remains completely methodical and calm. While Ravi is basically running for the exits, Rohan is stepping right up to the counter, buying high-quality businesses at a massive discount. Same event, completely opposite reactions.
So the crucial point is, how exactly does Rohan stay so grounded while everyone else is hyperventilating into a paper bag? I mean, is he just immune to stress? Well, no, actually, scratch that. It's not a personality trait at all. It's a structural portfolio choice. Notice that large 85% chunk? That's dedicated to his general growing assets. But here's the real secret weapon, this 15% crash capital reserve, held nice and safe in bonds. This isn't just some afterthought, you guys. It's a pre-planned, deliberate allocation that just sits there, completely insulated from the stock market's daily mood swings.
And here's the thing about this 15% reserve. It's not just a defensive safety net designed to help Rohan sleep well at night. Oh no, it is a highly offensive weapon. We call this the 15% advantage. When the market craters by 10% or more, Rohan doesn't need to panic because he holds dry powder. This is the exact, precise mechanism he uses to opportunistically scoop up quality businesses that have suddenly gone on sale. He's not out there buying junk, right? He's buying top-tier companies that the panic sellers, like our friend Ravi, are just blindly throwing out the window. And this brilliantly illustrates a really cool concept from our source text known as the SAP, or Systematic Allocation Plan plus Lump Sum Strategy. It's a strategic approach where market volatility literally becomes a window for smart investors to grow their wealth way faster than the average. Just think about the power of that framing for a second. Volatility is no longer a threat. It's no longer something to be feared or avoided. Through this strategy, volatility is completely transformed into your direct advantage. It becomes the very engine of your accelerated wealth creation. How awesome is that? So let's methodically break down the core outcomes of adopting this mindset, because this is where the math really starts working in your favor. First, volatility is a window. It's temporary. When the market drops, a window opens up, giving you access to prices you probably haven't seen in months or even years. Second, it accelerates wealth growth. Since you're buying at a discount with your crash capital reserve, every single dollar you invest buys way more shares, compounding your growth dramatically when the market eventually recovers. And third, this allows you to outpace average returns. The average investor, they panic like Ravi, but the prepared investor, they act like Rohan. By treating market crashes as a feature of the system rather than a bug, you mathematically position yourself way ahead of the herd. Let's move to and see how this builds into a profound psychological battle happening right inside your own head. Because honestly, this is perhaps the absolute most crucial takeaway from the whole strategy. The consumer brain is that primal part of us wired for immediate survival. When the consumer brain sees prices dropping and people screaming on TV, it senses danger and demands that we flee. It wants to act exactly like Ravi. But to secure the investor reward, you have to actively override that primal consumer brain.
You've got to train yourself to see a 10% drop not as danger, but as a giant clearance sale. It requires immense discipline, for sure, but as we've seen, having a structured 15% bond reserve makes ignoring that panic instinct so much easier.
So as we wrap up our explainer today, I want to leave you with one final provocative question. And hey, make no mistake, there will be another crash. Markets always cycle, that's just a fact. So when that red 10% flashes on your screen again, during the next crash, which brain will you listen to? Will you let the consumer brain take the wheel and force you to panic sell? Or will you activate your inner crash capitalist, deploy your reserve and claim the investor reward? The choice and the preparation, well, that's entirely up to you. Thank you so much for joining me for this explainer. I really hope it helps you see the next market dip in a whole new, highly profitable light. Keep learning, stay prepared, and I'll catch you next time.